To the local stock market now, and for the third day in a row, Australian shares have moved in the opposite direction to Wall Street. For his assessment of today's action, I spoke with Ken Howard from RBS Morgans. Ken Howard, it's been a broad-based decline on the local market today. To what extent is that a bit of profit-taking?
Certainly there would be some profit-taking after last week's volatility, but I think part of the broad-based decline is the fact that credit markets in Europe, as I'm sure you're touching on your program tonight, still remain very jittery, and with the presidents of Germany and France having to meet to try and placate markets, it's obviously a sign that all's not well, and it's still going to take some time for those matters to make their way through the political process and therefore make their way through investment markets. So still a rocky road, and certainly some profit-taking being a bit of a pressure today.
Well, let's go to some of the corporates now. BHP Billiton appears to be developing plans for its own rail lines from its own Queensland coal mines. To what extent might that be a threat to QR National, who I think disappointed was underperforming the market today?
Look, I guess it's some kind of threat to QR National, but really there are so many very large projects planned for the Queensland coalfields. There's something like in excess of 300 million tonnes of additional capacity talked about. That's just not possible for QR to guarantee that they're going to develop all of the railway infrastructure that will be necessary here in Queensland. So I think it's just part of the natural evolution of these projects coming forward, that the big miners do their own cost-benefit analysis of building the infrastructure. We certainly feel that QR's existing infrastructure is going to maintain most of its monopoly characteristics, but it's extremely unlikely that QR will retain all of the coal railway infrastructure in Queensland. There's just too much work that needs to be done.
What about some of the other results out today? I see APN News and Media has been disappointing the market as well. Take us through the lowlights.
Yeah, sure. The APN result was obviously taken very poorly by the market. It was down about 12% on the close. The big headline number is a loss of about 98 million, of which 150 million was attributed to a write-down of the intangible values of their New Zealand mastheads, that's their New Zealand newspapers. So although APN was able to maintain a fairly constant revenue line first half versus first half last year, the costs were a bit out of control. Part of that, I guess, can be attributed to the floods, the cyclone, the earthquake, but also part of it's just to do with the headwinds that the media industry is facing. So the market certainly didn't take the APN result terribly well today.
On the other hand, the country's biggest cement maker, Adelaide Brighton, made a better fist to the latest trading period, didn't it? Yeah,
look, Adelaide Brighton, I guess, while a very different business to APN, you would think would have some of the similar headwinds being exposed to the construction industry, but it has a substantially stronger balance sheet. The interest cover is close to 15 times EBIT, and Adelaide Brighton has actually been ahead of the game as far as pulling out costs. So good cost control was seen in their results today, but also Adelaide Brighton, their stock code's ABC. Adelaide Brighton had made 3 acquisitions so far this calendar year. So vertical integration and growth is still part of the Adelaide Brighton story, and obviously with brighter prospects and a stronger balance sheet, we saw that share price up about 4% on the close.
Ken Howard, thank you for joining us.
Okay, thank you, Tiki.